Ballooning medical bills make health insurance an important part of the health ecosystem anywhere in the world. Lack of insurance can be financially fatal, and so a health insurance policy is a must-have in your money box. Hello and welcome to Why Not Mint Money. I'm Deepthi Bhaskaran, and today I'm going to help you understand health insurance better. Broadly, there are two types of health insurance plans in the market: indemnity plans and defined benefit plans. An indemnity plan or a basic health insurance policy pays for hospitalization bills up to the sum insured. The cover also includes pre- and post-hospitalization expenses and listed daycare procedures. Since it pays for medical expenses you have incurred, you could either go for a cashless claim where the insurer settles the bill with the hospital directly, or you could first pay up the bills yourself and then get it reimbursed. If you're hospitalized in a network hospital of the insurer, the claim is typically cashless. The other type of health insurance is called defined benefit health insurance plans. This means it doesn't reimburse you the cost of expenses that you might have incurred during hospitalization, but it pays a defined benefit upon an insured event. Health insurance products like critical illness plans, hospital cash policies are all defined benefit plans. The plans pays the defined sum assured on diagnosis of an insured illness or procedure regardless of the hospital bill. Typically, defined benefit plans are one-time payout plans, so if you make a claim on your critical illness policy, the plan terminates after paying the claim. Indemnity plans or a basic health insurance cover, on the other hand, can be renewed for life even when you make a claim. So that's the product you need to buy first. But knowing what to buy is only half the battle won. You still need to find answers to how to buy this cover, the amount of sum insured that would be enough, and what's the most cost-effective way to buy health insurance. Let's decode these questions one by one. So if you have a family and are in the market to buy health insurance, the toss-up really is between an individual health policy and a floater plan. An individual policy, as the name suggests, is for a single person, whereas a floater policy covers the entire family as one unit. This means that the insurance cover is shared by the entire family, and this makes a floater policy cheaper compared to buying individual plans for the entire family. For a young family, a floater plan is recommended, but make sure you buy a decent cover. Yes, the probability of all the members needing hospitalization in the same year is low, and therefore not everyone will need to make a claim on health insurance. But it's a risk nevertheless, and this can be mitigated by taking adequate health insurance. Planners recommend a cover of at least 10 lakh for a family of 4. And if you live in a metro, you may want to increase the cover. You should also keep in mind that the cost advantage of a floater plan doesn't work if the age gap between the spouse or with the eldest member of the family is huge. Even when one individual is not in good health and poses the risk of using the entire cover, a floater may not work. For individuals, a cover of at least 5 lakh rupees is recommended. But again, this would change depending on where you live, hospitals near you, etc. And if you're worried that this would mean a huge burden on your pocket, there is some help at hand. You could consider top-up plans to maximize your insurance cover while keeping costs in check. A top-up plan is a regular health insurance policy that covers hospitalization and other costs that a regular health insurance plan would cover, but only after a threshold limit. This threshold limit is called the deductible. So a top-up plan will not pay the deductible amount, but an amount over and above that. The deductible feature of a top-up plan makes it a cost-effective way to increase your health insurance cover. Take a regular health insurance to cover the deductible amount and a top-up cover above that policy. Top-up plans can be taken as individual and floater policy, but make sure you take a super top-up plan. A super top-up or aggregate top-up plan looks at aggregate claims and puts together multiple cases of claims in a given year to calculate the deductible amount. Also, top-up plans may not always be cashless, so always ensure that you have a decent cover through the base policy. Health insurance is important, but it's equally important to cover yourself right. In order to help you choose a comprehensive health insurance plan, we've developed our health insurance ratings in association with SecureNow Insurance Brokers. And that's what we will be looking at in the next episode to understand the innards of health insurance. Thanks for watching and do come back for more.